Thanks for clicking. Canada's new build condo market is rapidly slowing down, according to new reports released by Urbanation, a real estate consulting firm, and the latest housing market index just released by the Canadian Home Builders Association. According to the new reports, increased costs combined with weakening demand on the part of homebuyers have led condo builders to shelve building plans.
I'm not going to pay it.
Oh yeah?
Given that CMHC just recently released a report saying that Canada needs 5.8 million new homes by 2030 in order to avoid an affordability crisis, the slowing down of building is not a good sign. So what I want to do today is go over these reports, look at what the builders are doing and how this will affect Canada's real estate market, look at these implications for the future, and then discuss what to look for next. Speaking of next, we are waiting for the release of the national statistics on Canada's real estate market from the Canadian Real Estate Association, the CREA. We'll obviously have updates out on that national data on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into these reports. Urbanation's report starts by looking at condo sales in the Greater Toronto Area, showing that sales had slumped by 19% in the second quarter of this year compared to the first quarter, and were down 24% from this point in time last year. And with slumping sales comes a slowdown in the absorption rate. That is the rate at which new condo builds are purchased once they come on the market. Last year, we saw a peak of 81%, and that has slumped down to 57% this year. So, out of all the new projects that have come to market, only 57% of them have been bought up. And as with anything, this is due in large part to price. When interest rates were low, there was support for these condo projects at the current price level. However, with second quarter interest rates and first quarter prices, demand has all but dried up.
It's not going to happen at that price. That's all there is to it.
However, unlike the real estate market as a whole, where we see price drops in response to weakening demand, in the condo market, builders are instead holding back the production of new units. Urbanation says that while GTA condo builders had planned 35,000 new units over the course of the year, they have since shelved plans for 10,000 new units over the course of the year, dropping down the total amount of units planned to 26,000. So unlike Canada's resale real estate market, where weak demand leads to an overabundance of supply and lower prices, in the new construction market, weak demand leads to less supply as condo builders hold back the amount of condos that they build. Indeed, Urbanation says that these condo builders are citing higher borrowing costs, higher construction costs, higher interest rates, and labor shortages, all as reasons that they can't lower prices on these new units, and as a result, they just have to shelve plans for the construction of these new units.
Sounds like a bunch of bull to me, boss.
And this sentiment on the part of home builders is not just confined to Toronto. According to the latest housing market index released by the Canadian Home Builders Association, confidence all across Canada is low among home builders, due in large part to higher interest rates, higher cost of borrowing, supply and labor shortages. Indeed, nearly half of all home builders across Canada are reporting a slowing sales and home buyers holding off purchases since interest rates started going up in March. And they're also reporting an increase in construction costs, with the average house now costing an extra $36,000 just in lumber, combined with a major increase in the cost of labor and tradespeople. So to summarize, buyers aren't buying at current prices due to higher cost of borrowing. And as such, home builders aren't building because they aren't getting the prices that they want for their condos. And this comes at a time when CMHC says we need an additional 3.5 million new homes by 2030, over and above the projects that have already started. And it's not clear that we're at the end point either. Robert Hogue, an economist with RBC, says that we'll have to see how many speculators had bought into these new builds, those that are currently under construction, those that were purchased before the market shifted. Once those projects come to completion, we'll get a much better idea where the condo market is headed, as it's quite likely that a lot of those speculators that purchased these new builds will have to sell them, flooding the market with more condos, which will put even more downward pressure on the price of our condominiums. So all in all, not a great situation. Home buyers aren't buying, builders aren't building, and this comes at a time when Canada is definitely in need of more housing supply by 2030. And it doesn't look either as though there's any relief in sight, as interest rates are set to continue to rise for the rest of the year, We could see even more condo listings hit the market as speculators need to unload their properties, and this comes at a time when condo builders are already holding back more supply. All in all, not great. How high our interest rates go and how much pressure that puts on our real estate market, on our new build real estate market, will be largely dependent on Canada's inflation rate, which is set to be released on August 16th, and we'll obviously have an update out on that rate on this channel. If you want to get those updates, make sure you click, like, and subscribe, but for now, thanks so much for watching.